Hello, 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 everyone! Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Shorter live stream this afternoon. Sorry about the slightly delayed start. Was looking at some of the Tesla earnings. So, how is everyone doing? Also, we had some topping patterns trigger. Boy, what a market this is. Schizophrenic market. Nice little rally in energy. So, good afternoon. Sashi survived the last minute on Tesla. Good afternoon, Patrick. Good evening, Anissa. Good afternoon, Jacob. Hello, George. Good evening. Pedro, learned a lot here. Does Coinbase qualify for further downside? Yes. We can look at it. I might have to wait for beyond today to look at it, but we can look at that at some point. Thank you. I'm glad you did learn something here, Pedro. I hope you continue to learn something. Good evening, Christoph. Chris Plummer, I'm on time. Okay, test the simple. I don't follow the simple, but that's good information. Hey, can you give my opinion on the back test? What of back testing? You mean on the 20 simple? I found the 21 exponential works better than the 20 simple. That's why I use 21. Or you can use, I mean, it's rough. You can use a 20 exponential. You can use a 22. It's a right, but I found the exponentials work better for the 50, the 8, and the 20, 21. And the 200 simple moves better. Tests out better. So don't use the exponential on the 200. It actually front weights prices too much, and it makes it a little less reliable. Thought I'd join. Love my clickbait. What, Tesla? Tesla down. They missed on revenue. They beat on adjusted EPS. So there's your answer, Chris. Please smashy the likey. I like that. Smashy the likey. All right. And that goes along with Fed Speaky Speaky. Lucky Bob's not here to complain about the Speaky Speaky. By the way, if you are new here, please do consider subscribing. Smashing that like button and ringing that bell. How's that? How's that for the dramatic voice? Hey. All right, so today we already went over. We just had the beige book, nothing out of the ordinary there. We had Fed's cash and carry. Speaking earlier, we had some speaks now going on. Well, at least I saw. Was scrolling by. Nothing different though. Nothing really different. Same hawkish rhetoric. Increased rates might pull the, I think that was Cash Shakari, he said, might pull it forward next year's hikes into this year, which I think they were only probably planning on a quarter point in February. So does that mean it's going to be 75, 75? Who knows? It's, they're going to keep hiking. There'll be a pause. There'll be a pause next year. There's not going to be a pause this year unless something caves in the market. Tomorrow, you got the initial continuing jobless claims. Unless these are big misses, won't have any effect. Why, if they're big misses? Because then we'll have the rhetoric. Look, job market's turning. Fed's got to pause sooner, or they're not going to be as aggressive into the end of the year. That's the only thing I'm really watching for with this. Fed manufacturing is minor. Remember, this is 1 hour before the open, so 7:30 Central, 8:30 Eastern. Still watching to see if that's in contraction. Remember, NY Fed manufacturing was in contraction and pretty bleak from Monday. Then we have the Fed business conditions, new orders, prices paid. I'm going to be seeing how this prices paid compares to previous. Again, minor because it's regional. But it will be interesting from my own perspective, not necessarily very market moving. Consumer Board Leading Index Forecast -3%. Gonna see if that still comes to negative. Remember, that's the leading indicators, which have been rolling over. So this in line with previous, but this is a leading indicator, which shows things are slowing down. Existing home sales, I don't think that's gonna. I mean, it'll be a pretty bad number for my expectations because now we're into the major slowing period. But I don't know if it can be bad enough to do anything to the market and existing. And then we got Harker, Jefferson, Cook, Bowman. Yay. I mean, unless they come off sounding dovish or saying stuffing that, the people are going to interpret that they're not going to be as aggressive with the hikes or go into pausing sooner, there's nothing that's really going to be shocking. Here's your market map again. Oil. Nice little rebound in oil today, and Exxon and Chevron moving up really nicely. Conoco moving up really nicely. So the trend continues. We talked about that little potential double top in Exxon, which has not triggered yet. So that's still a fantastic stop level. It might be gone now. I did not look at it into the close. Little strength in a couple semis today. Mega caps mixed. Tesla was slightly up. Never triggered the double top, which with price action after hours now is back down. Was around 212 after hours last I checked. Home Depot and Lowe's sort of taking it in the shorts, down 336 basis points. You can see only energy was the strong sector today. Everything else was negative. Finally, real estate coming to its senses. But you still have the weaker stuff returning to weakness mode. Pretty weak market overall, though. I'm surprised. The futures held up remarkably well for as weak as the market was. FOMC still 96% forward at 75 basis points, still in negative gamma territory. Nothing's changed there. Fear and greed. We'll have to see where to put in calls, with the short-term options going off. We have been climbing on the 3,700 call gamma. So do keep that in mind if we really start snapping at that 3,700, snapping back to that 37. IBM was up on their earnings. Again, Tesla down from the close. It could change. You got Elon speaking. Where do we sit right now? Let me just peek back in Tesla. Where do we sit? 214 post-market. Again, the doubles pretty much, it never triggered. Off the table. Very narrow range going into earnings. We're still long-term bearish. So if anybody tunes in, we're long-term bearish. You can start to hate comments now. All right. Cycles, focusing closely on this. Again, we had the dip back down. See, we've had a fair amount of buying pressure. Dip. Finally got the trigger, 4 hour and 1 hour on this double top. So it is a triggered double top. Triggered double top. So warrants not guaranteed. Now again, nothing's guaranteed, but very decent probabilities. The stop levels on a closing basis, at least on a 1 hour, above 37.47.25. On a trade through basis, 37.57.25 are the stop levels. This triggering and catching on that 4 hour 50 and bouncing back, but not surprised to see a slight little bounce back. Many times we do see that into the wicks, although these were very long wicks on the 1 hour. So the area I was watching for the bounce back play, for people newer here, I watched for the bounce back play between the trigger point, which was a close below this low, and then back to the candle bodies. So these were the candle bodies, and so far we've held that bounce back. So nothing else really to talk about. This just pullback gave better reward to risk. The target's 36.57.25, 36.37.25, 36.17. Actually, it's better to, based off this intraday price action, it's actually better to use, let me get this on here, to use the conservative targets. Even though the trend is down, it's better to use the conservative targets. I should have flipped those. 36.58, 75. Also, why have I switched to conservative for my own stuff? I just didn't change these charts because we have a 50% harmonic, a flat 1 hour 200, and the first target all in the same vicinity for stop reduction. So we have a major cluster right there. So that's 36. You can go 36.59. Then this lines up with another key harmonic, 36.39. And then the final target also lines up with a harmonic, 36.21, 36.20, 25 area. Do the lineups make it higher probability? No, the probabilities are still the same on the double top, but it makes the target areas more robust for potential bounces. So that's why I flipped in case people are trying to learn some other information. Normally, since the major trend is still down, I'd use the aggressive targets, but these lined up better, and that's true across the board. If one set of targets line up better and give you clusters, use that set of targets. It gives you stronger target areas. You're better to, instead of trying to finagle other targets, just fine-tune the targets by using the aggressive, because I tried multiple ways to test out doubles. And the only thing I found that was reliable for using aggressive versus conservative targets was with the longer term trend. Everything else, though, was based off any checking on targets when they lined up with other key harmonic areas or other key price action targets. It was best to use the targets that lined up. All right. So there's where it sits. You see here, still kept holding against this prior resistance, still holding support. Then we have volume still after the major run up back on last Thursday, the sort of retrace on Friday. Yesterday we didn't look at the volume, but it was at least a little more decent. But today, starting to drop down, a little surprising on that down move, but absorbing. There just wasn't a lot of follow through there. Not a lot of follow through. By the way, daily cycles, I'm keeping a close eye on this for the potential rollover. I'm also going to bump this up. Why am I bumping this up? To fine tune. We now have a very decent pausing bar on the daily, so that'll help me fine tune within this 87.5. So now we have conflicting information. This is sometimes what happens when we still have that slight bullish bias, but we've triggered a pullback pattern. Don't like when that happens, but it happens. NASDAQ, you can see here on the 4 hour confirmed, on the 1 hour confirmed, but the NASDAQ, which has been the weaker market, what's interesting is the weaker market did not trigger the double. Another mix. Okay, so we don't have confirmation from the NASDAQ. What's interesting is the S&P tests out slightly higher probabilities than NASDAQ for patterns. So the S&P triggered the double, the NASDAQ didn't. It's just one of those market times, but the NASDAQ confirmed. By the way, also with this, I would shift because of the target areas with the S&P. I just shift this to conservative if it is to trigger, which it has not yet. 10.934, 10.859, 10.784. Just the nature of the markets up there, up here. So, also remember one other thing. So the S&P closed above the 62.5. The NASDAQ never closed above the 62.5, which was a short-term bullish signal. So the market that did not trigger the shorter-term follow-through signal also did not trigger the bearish pattern. Go figure. Can I explain the markets always? No, I can't. It's just, and sometimes you get conflicting info. Where do we sit? Is nat gas dead to the world? I don't know if it's dead to the world. It's just going into, I'll call it sleepy mode. Hey, Gary. So, and since Bob's not here, I can't annoy him with my double word patterns. Now, the Dow did trigger on both the 1 and 4 hour before the bounce back play. Again, conflicting info. Do I know which will work, which won't? No. If I did, I'd tell you. Nothing worked with the testing has been able to identify that. 30,672 is the stop on a closing basis. 1 hour at least. 30,740 is the trade through stop. Targets, I also have to flip this one. It did flip this one to the conservative. 30,091, 29,969, major target 29,850 virtually. So that's where we sit with that. Not much else there to talk about. I mean, all your cycles are the same going on here. Russell never had a topping pattern pulling back to the 50% harmonic with the bounce. So Russell, no patterns. Confirming this double bottom, but never triggering the double bottom. So the Russell's just in no man's land trying to figure everything out. So no patterns on the Russell. It's just one of those markets. That's all I can say. I guess I'm repeating myself with that. Christopher, can you go over the rules of double top and double bottom? Confirmed versus not confirmed. Yes, I can. And that's a very good question. We'll use the S&P. Why do we have it this way? Because the probabilities drastically, remember, well, if you're new here, you wouldn't remember this, but of any bar, especially your longer bar time frames, the close is the most important print on any bar, the closing price. So if you want the higher probabilities for doubles to be triggered, you wait for a close on the time frame where the trigger is relevant. If you're being a little more aggressive, you can go one time frame down. So this we had on the 1 and 4 hour. You can see here on the 4 hour, 1 hour. So you need either 1 or 4 hour close. Now, what confirms a pattern is when you get a trade through. So if we got any trade back below this base point, and it would be the opposite for double bottoms, any trade through 36.9725 would confirm the double but not trigger it. For example, NASDAQ, you have this right here. See how it was traded through? So the double's confirmed. You did not get the close. So not triggered. If you're using the conservative rules, not triggered. It's confirmed. Also, once it's confirmed, you don't move around. You settle on your targets. You don't move them around. This is technically the base. Sorry, I had the wrong base on there. Okay. So this is in stone. It might never trigger from a closing basis. Could this rally back up here and turn into a triple top without ever triggering? Yes. However, like for the S&P, this is triggered. So what does that mean? If it rallies back up here, that's a stop out then. On a closing basis above 37.4725. Once it hits this first target, then it's moved down the stops. So that's the difference. For example, one more thing, the Russell on this big double bottom play confirmed. It was a daily double bottom, confirmed, but did not trigger. So this has been confirmed, but not triggered. There, I got your question answered, Christopher. Hey, Waka Waka. Waka Waka with the RIP Tesla. All right. Let's just get to some other stuff. So we got the little pullback on the DAX after this one confirmed and triggered on the same bar. Pullback. Nowhere near a stop level, nowhere near stop reduction yet. Notes. This is another thing that was a little surprising to me. Notes, incredibly weak 10-year notes. Slicing through new lows in the notes. Not yet to this 109.24 and a half, and then 109.05 next target. But this very bearish price action, by the way, the potential double bottom on the daily, which has not been confirmed. So definitely not triggered. Again, it's just a potential. We keep an eye on it, but it could be off the table soon. You get the notes pushing down much lower, done. So then it just doesn't matter. It was just something we were watching. But I'm surprised the market held up so well with the notes like that. The dollar index wrecking ball. Here's an example. Confirmed on this candle. Triggered. Stop raise. Second target hit. Final target 112.90. Nothing else to do there. Now we get a strong rotation back up. We'll have to see if it invalidates the pattern. So I'm actually surprised also that the market, especially this afternoon, held up with the dollar index this strong. But you got to trade what is, not what you should think should happen. VIX inside bar from yesterday. So that means I am now focused on yesterday's low and yesterday's high. Bearish mode above yesterday's high for continuing bearish mode, so giving fuel to the double top pattern. Above yesterday's high, from the double top perspective, not good if we break below yesterday's low. Crude, decent rotation back up. This was an interesting double pattern. Why is it interesting? Because you can see it here on the 4-hour, but people would think this is the peak. This is why you got to vet things. This is actually the peak. Why is this a peak? And this does test out fine. It's just one of those weird ones because if you come and vet it on the 1-hour, this was the spike high. This other high did not come back there. This did retrace low enough. This is the confirming bar. This did not come down to triple territory. This was the trigger bar, pullback entry into the rotation zone, first and second targets hit. Is this a short-term potential double top? Yes, it is. Does that mean because you have a potential you just get out? No, because this could continue to the next target and this will never have triggered. But it is a potential. There's your little double lessons. Natty Gas retest. Oh, I mean, Natty Gas dead, but I mean, we're coming back down for all the people who said that this will never get to the targets. Well, here's your double top, triggered, paused at that. Look how much pausing there was that first target. Second target, I actually did not look at it today, and now closing in on the final target. So Natty Gas is, for all pretty much sakes, I mean, if you're still in this, it's aggressively moving down a target. You're aggressively moving down your stops at this point. What else I want to touch on with the dollar wrecking ball? Then we'll take a quick glance at some other stuff. Then I have to run. Euro. Not much. The key area I'm still watching is a return to 62.5. We should technically still hit lower prices. Double top, not confirmed or triggered, but based off this multiple closes, we should still target lower prices, and we finally got the reversal. Pound. I talked about why this on the shorter term basis was still a valid double, so that's the only thing I'm watching right there. Or unless we get back above the 50 on a closing basis. let's peek back in at Tesla. Where is it trading? 213. So not much to talk about right there. So now that earnings are out of the way, if Elon's going to sell for the Twitter thing, there you go. So my minor targets at downside, oh, those are very minor. 295, but I'm focused on 197.95, 193, then 181. Holding with that rotation zone. Yes, we'll take a look to see if this forms any other patterns tomorrow morning. But it's still caught within the lows from Friday, so not much else to talk about. What else? CVX or COP. Chevron, ConocoPhillips. Again, energy sector. I hope everybody watched the sector overview where pretty much besides commodities, the only sector still in bullish mode is energy. From the longer term perspective, after the close on the 13th, you had the close above the 62.5. It closed here, pulled back, but now we're revalidating that close. I would be targeting this 176 area. So that's it for that. If you want to use some other harmonics. Oh, sorry, that shifted. Hold on. Let me revise that because that was off. Never mind. Disregard that. 176.02 is the exact target area. Sorry, those lines they're still shifted. There. Disregard that. 174.58 is the correct target area. We gotta be exact. I would use like 171.27 for a stop raise. Also keep in mind you have a key gap fill right here. See right here? Here's a breakdown zone, which has some pretty decent minor significance right here. Minor, not major significance. So that would be another area I would raise, but I'd be looking at this area right in front of this 87.5. You still have a gap fill left behind, so that's going to be a gap magnet back to this double top area. There's your CVX, COP, the ConocoPhillips. The only thing I'd be keeping an eye on already right now is this would be for stop levels. And it's sloppy, but it's completely valid for stop levels. 115.71 on a closing basis would be a really appropriate stop level to trail out in ConocoPhillips. Your next harmonics for your higher target, should it continue on its march higher, these are the levels I would utilize from the most recent significant swing. 126.69, 129.98. And again, what I like about this stop on a closing basis is it would also close below the daily rotation zone. What you see on the last move up, we have no closes below the daily rotation zone. So that not only would trigger a little horribly sloppy double for a bigger pullback, but would also be the close below the daily rotation zone. I mean the 4-hour rotation zone, sorry. If you want to give it a little more room, you'd use the daily rotation zone. Where would my pullback be? Then into the weekly rotation zone and watch for a bottoming pattern in that weekly rotation, closer to the top of the weekly rotation zone this is a key breakout level. We've already retested this one. So if we break below that one, this would be my key area. I'd be watching for a bottoming pattern on a pullback. Other than that, it's trading with the trend to the long side. Listening to all the bulls justifying Tesla loss, well, you know what? I will say one thing. No matter what stock or market you're in, please learn to analyze and look at both sides and don't get blinded by anything, whether it's your favorite stock or your least favorite stock, because you're still going to want to do double-sided analysis. It prevents you from getting blinded by stuff. Even though I'm bearish on Tesla, you can see I analyze the bull side all the time. Why? Because you can get bullish patterns that play out, especially in the short-term time frame, which also sets up for potential reestablishing bearish patterns. But if you only look at one side all the time, even if you're incredibly bullish on something or incredibly bearish on it, you can get blinded and develop a scotoma, and then your analysis goes out the window. Especially true on the broad market. They can go, anything can happen in the short term. In the long term, I don't think they can go lower and lower with higher and higher yields without long-term consequences. In the short term, I mean, we've had today. In the last couple, we got out of oversold conditions on the markets. Now let's see. I trust the bond market more than I do the stock market. We've talked about that before. Why? Because the bond market is way bigger. It dwarfs the stock market. So overall, I trust bond market signals more than stock market signals. Just an FYI. Peeking in on the 10-year, still just this consolidation, not much movement. With the 10-year breaking down, if you're looking at the yield basis, I mean here you go. Here was the next target, 413. There you go. Next target hit. What's next? This thing continues to march higher. 4228. 4228. By the way, double top or potential double top on yields off the table. Did it ever confirm or trigger? No. Just something we were watching. Why am I reiterating this stuff? Because we're over 6,000 subscribers and we're getting more and more new people all the time. So, for the longer term people, sorry if I'm a little repetitive. Mike, it was nuts to see how the market didn't dump given the entire bond market sold off, yields rose, dollars super strong. Yeah, I know. It was interesting, but again, does that mean you don't trade a pattern? No, you got to trade the pattern. Again, I don't know what's going to work, what's not going to work. Did it give me a moment of pause to say, where'd the selling go in the S&P? With the dollar strength, the bonds weakness, yeah, it gave me pause, but you don't know, because we could wake up tomorrow morning and the market could be in the crapper. Don't know. That's why it's trading. That's why you got to align yourself with probabilities. There are no guarantees. We'll say that to new people. Anybody who says there's guarantees in the market, you know what? Even the market opening has not been a guarantee. I mean, we've had times, after 9/11, the market didn't open for a couple days. That's not even a guarantee, unfortunately. Seems like Roblox never seemed to break down, even though it has no PE. It will. It will. Remember, it's going to be nice for a potential gap fill here, but these plays are long term. Again, this might not happen again till after the end of the year. So anything short term, if the markets start rolling over, your trade in the short term is the gap fill, but I would not. Remember, the full gap fill is to the closing price down here. However, do not ignore 39.15 if you are trying to trade this from the short side to at least move down a stop aggressively, because that will be a focal point. Prior, this is actually a significant area also, but prior resistance confirmed here, becoming support with the gap. So yes, the full gap play is still to the bottom, but do not ignore that level, by the way, for anybody attempting to play the gap fill in Roblox. And no, it does not have a PE. Me too, Waka Waka. Tesla's I was saying, if it's trading there now, wow. Oh, Tesla, you think 168? I mean, we have, don't, you know, you're going to get me in trouble again. You're going to get me in trouble. 168, I think, is generous. I mean, my next target area, the next key one in the short term, is this 163 to 155 area. Pretty big support window in there. Longer term, I'm even lower than you, Waka Waka. Oh boy. Oh, then a final price at 60. All right, we're more in sync. We're more in sync, Waka Waka. US 30, that's essentially it's essentially the Dow. I mean, I already did my analysis of the Dow. It's trading. You have the double triggered. So unless this wipes out, I mean, I can put it up here, but if I follow the futures because the levels work out better. So remember the Dow on the futures triggered the double. But you know what's interesting is this double top coming back down here does not invalidate this double bottom. Has it happened before? Yes. It's actually happened multiple times where you get a trade within a trade. So we have conflicting patterns right here. In the short term, a pullback. In the slightly longer term, a rally. But if you want my breakdown of it, you'll have to go back and watch the replay. Christoph swinging some Tesla puts around. Waka expecting a massive drop in the 10-year. If somebody could report the chat. CHF and USD are risk-off play in the FX. Yeah, the Swissy is that way. Also, a risk-off play in the FX is traditionally what? The Japanese yen. The Japanese yen wrecking ball for the Bank of Japan. Hit the next. I mean, we've run out of harmonic. This is how bad it is. Their last intervention is barely a blip. This is how bad it is. You want to see this? I mean, I should have touched on this earlier. Cycles pinned to the top, massively overbought. They're going to have to do something pretty soon, and we'll see how long that intervention lasts. But remember, these interventions haven't even been lasting an hour. So this gets a little more troubling. To do the projections, I need a pausing bar. The best we can do at this point is use our short term, our very short term. 150.52, 151.65. Just wanted to point that out too. This super overextended. But this is eventually going to, I don't know when, but at some point there's also more and more pressure coming in. Remember, they keep the 10-year pegged at 25, keeps leaking over. the 25 basis point number. You see, this was them having to buy it. Now remember, when they have to keep this pegged or do currency intervention, what are they dumping? They're dumping longer-term U.S. treasuries to do this, and it's getting harder and harder. So if they have to keep intervening, one of the things is they have to keep dumping treasuries. Gonna get interesting. I saw it was down. I did not see the final thing was 7%, but I know it was down pretty substantially. I think China's going to unravel, which will get interesting also. This is not going to be a boring fourth quarter, is it? Okay. So, I hope some of the newer people learned something here. Sorry for all the lines. We can take them all off, though, and just look at this. Now, what's interesting is if you look at this also from a weekly perspective, so far, this is a sideways correction on a weekly. That's all it is. A sideways correction against the 200. Always remember, it's going to be real interesting to see if this week closes above the week lows from June 13th. I know it's not the lowest low on the weekly close, but this is key resistance on a closing basis. It's going to be interesting to see the next 2 days. But so far, this is just a sideways correction with the weekly rotation zone. What do I think is a good put sell for Polestar? What would I be willing to have it assigned to you? I'd have to do more fundamentals on that. I would not be able to answer that assignment question without doing some more fundamental research in this. Okay, so I can't answer that just yet. What would be a good... This is just brutally hard for a target area too, because of the way it's been trading. If you wanted to use your harmonics, this is the harmonic. 361. I just want to see where these other harmonics line up to, just for... So we're pausing right here. The harmonics on there, but they're very separated. You got to take that with a grain of salt. But I'd be targeting for anything from just a pure technical level, 361 at this point. So we're oops, wrong window. Hold on, I was gonna do something quick. Let me just see something quick right now. I'm looking at another screen, so that's why I'm looking the other direction. Give me 1 second. I just want to check something out. Come on. It's going slow. I'm just checking something out for the Polestar thing, but I might have to answer you later. Let me see if there's any other questions. They haven't raised it. It has not lost risk off. That's why it's been rallying. But they have not. They've kept their peg in place. At some point, something's going to blow. It's not lost risk off, though. It has not lost that status yet. So they've had that peg in place for a very long time at this point. Do you think this is an attack on China via stock market? No, I just think it's not an attack on China via the stock market. I just think you have a lot of problems in China. You have a lot, they've been cracking down on the financial system there. I see this continued. China has a lot of fundamental valuation problems in their own market, and they're going into financial interesting issues, and I think there'll be bank issues in China that are going to ripple through. I don't think it's an attack. Uh, Again, ooh. I will have to do some more. I was trying to look up a couple things on Polestar, but yeah, I don't think I'd even want to be assigned just yet at $2. Just doing some quick glancing through some of the numbers, would not want to even be assigned at $2 at this point. So, yeah, you know how many people have been. Yeah, it's going to implode at some point. We'll tell that to the Bank of Japan that MMT is dead, because they're still going hog wild on MMT. Yeah, will it implode? But people have been calling for the implosion of the Japanese yen and their bond market since at least 2010. And it's still around. It will implode at some point. I have no idea when. I wouldn't touch it. I wouldn't want to take delivery of it. No, I'm not talking about the cars. I'm talking about the stock. You know what's funny? Does anybody know what the analysts who are there's not many, but what the average target price is still is? Anybody want to guess what the Polestar target price, analyst target price still is? And then I'll wrap this up. Stayed a little longer than I even thought I would. Let's just see where everything is. Just leveling out there at 213 on Tesla. The average analyst price $10 still on Polestar. Don't. No, it's actually, you're a little high, Jacob. It's 10. You know, it's good. Polestar will probably hit that $3 area, and then they'll lower it to 8. Don't follow what analysts' price targets are. It's such a joke. You know. Thank you, Christoph. I'm going to wrap it up for now because I was going to try to listen to the Tesla call, but I got to get the doggies out first. Well, if Elon's on the call, could be a wild one. Remember that. I'll leave it at that. Sorry I can't stick around and see what's going on with the call with the live stream. But I'll have to catch up. And if there's anything interesting, remember to bring it to the morning live session. What kind of dogs do I have? I have 5 rescues. I'll just leave it as this. I have a Roddy rescue. I have a French bulldog all the way from a meat market farm in South Korea rescue. Of course, if you're coming from a meat market farm, it's a rescue. What else do I have? I have an Australian cattle dog mix rescue. I have a Catahoula leopard dog. Well, 70% of that mixed with a hound, rescued from a kill shelter in Alabama or Louisiana. I forget which one. I'll have to look that up on the paperwork again. And then what else do I have? Well, who did I forget? Oh, most recently was a rescue from last summer was a pit bull that was going to be put down. He is rescued and doing fine. My first pit bull rescue. So he was on the chopping block, nowhere else to turn. So he has a good life now. So 5 dogs, all of them do get along, for anybody who wonders. They are all crazy, and they're all rescues. All of them came from very, very poor circumstances. So, got a wolf dog a year ago. She's the best, just very destructive sometimes. My Roddy, after I got him, ate through 2 sofas and a pair of custom-made wood plantation shutters. You want to oh, this is a funny story too. This is years ago. I mean, I've had him for a long time. He's over 10 now. But I was giving my dad a flat screen TV for his house out of my house, and we loaded it in the car in the back of my Subaru Forester at that point. Laid it down on its back, to drive it to his house. The Rottweiler Roddy bumped open the garage, the door separating the inside to the garage, from the inside of the house into the garage. I call it the garage door, but it's not the garage door that goes up and down. It's the garage door that swings in and out to get into the garage. Saw the back of the thing open, thought it was car ride time, ran and jumped into the back of the Subaru, landing with full Rottweiler weight on a flat screen TV. A 55-inch flat screen TV. That flat screen TV did not survive. And it was one of those things you see happen in slow motion. You're like, no! Took a running leap, and it was just like you can't do anything by that time. So, the Roddy has cost me a little bit of money. But, oh well, so there's a dog story for you. Yeah, 5. I wasn't planning on 5, but I'm not going to let a dog get destroyed unnecessarily. I have a huge heart. Thanks, Daniel. Okay. They do have a horrible rap, and this pit bull is scared of his own shadow. He did not come from good circumstances, but he is a sweetheart. Yeah, so I ripped the couch and shutters. Like, don't trust me, a plantation shutter covering a full sliding door. So, floor to ceiling plantation shutter. So, yeah, ripped the TV too. It was like a scene from a movie. I can laugh at it now. I was not laughing on that day. It was an expensive rescue. See you later, Gary. All right, with that, I will leave it. So if you wanted any insight of who I am, I'm the crazy dog person. Crazy dog person. I will chat with everybody tomorrow. Thanks for tuning in as always. Thanks, Ted. Somehow I see all of us as Mike's Rescues. I'm just trying to help people. It's in my heart too. That's why I'm here every day. I'll chat with everyone later. I already answered that. Go back and watch the recording and look at my analysis of the Dow. The US 30 is the same as the Dow. Just watch my analysis on the Dow. Bye for now.